Hi, it's David Lee Goodman. I'm a real estate agent, property manager, and property investor in the Nashville, Tennessee market. And today I've got Josh Jones back. He is our local loan financing expert. Thanks for coming back on to whatever this is.
Of course. Thanks for having me.
And so today, a few weeks ago, we kind of went into the home buying process, and we brushed over the lending process. And today I wanted to dive deeper into what that process is, because it's really, really important. Actually, it's probably the most important aspect of buying a home is how are you going to finance it and pay for that thing. So I think most real estate agents would let their clients know that that's probably the first place to start.
Right.
But Josh, can you, I guess, introduce yourself, and then, let's go into
Awesome.
the
Josh
loan process.
Jones. I'm a certified mortgage advisor and loan originator. I work for Preferred Rate here in Mount Juliet, Tennessee.
Cool. So how do you, when you first get a hold of a client, how do they get a hold of you most of the time? Like, how does that whole process start, and where do you guide them?
So typically it's either they find me on social, or a relative has referred them to me, or a wonderful agent like you refers them to me. And then I either give them a call or they give me a call. Sometimes that phone feels like it weighs 1,000 pounds when they're trying to pick it up, call me, because it can be a little intimidating sometimes. But do they normally go straight to you? No.
Like, at what point does someone realize, like, oh wait, I need to actually talk to someone about, do I even qualify for a loan?
It's typically once they've talked to an agent and they want to go look at houses, and the agent's like, hey, have you been pre-approved? And they're like, no, I didn't know I need to do that. Which is always, typically in a perfect world, they would start with me. And then, hey, get pre-approved, then go with an agent, go, hey, I'm ready to start shopping.
Right. And I would say when a primary home buyer gets to me, I think before they got to me, they're on like Zillow,
Yes,
Realtor.com, and they're looking at houses. Realtor.com, Zillow says, this is what your monthly mortgage would be. And they go, oh, I pay that in rent. I can afford that.
Right.
Let's go buy it. And so I get a phone call and quickly realize whether or not this person understands kind of what the home buying process is.
Yeah.
And then I quickly move them towards you and to figure out, can this person even buy a house? What do they need to do in order to qualify to buy a house? Because the lending process is not really very easy to grasp or understand. It's not like going to buy a car and telling the car company, I make this amount, and getting approved like that day on, you can go buy something. I've got clients right now, entrepreneurs, people I know, because they can't buy a house, they're probably not really clients, but I know folks who make tons and tons of money, but they write all of it off.
Yep.
And they can't even buy a $300,000 house.
Yep.
But yet they're driving this, $80,000 truck, and are cash flowing, $1 million gross. But when they look at the net, it's like zero, and can't do anything for them.
Yep.
Right.
Yeah.
So like that is, I think, hard to grasp for a lot of people. Like, how could this person make so much money? But at the end of the day, you have to qualify for the loan. In order to qualify for the loan, we look at tax records and things like that. So just like information that people don't really grasp and understand. So that's why it's good to go straight to you.
Yeah. I mean, for a standard mortgage, like up front, the documents that I have to review legally is I have to get typically 2 years of tax returns, 2 years of W-2s, or if you're not W-2, 1099. Then I have to get 2 months of bank statements.
Right.
And then a month of pay stubs. And they, like you said, I mean, they have to review all of that, and everything's got to have a paper trail for it. And that's the stuff that a lot of people don't realize, where, this stuff, it kind of makes me laugh when I hear the housing bubble stuff, because if you've been through the mortgage process these days, if you own a home, it's because you should own that home. Like it is not. They don't like you. Perfect analogy is a car. Like you can't just hey I make this and they run with it. No, they have to verify it. We have to double, triple check everything to make sure that you can pay for that home and you're not gonna like default on your loan, basically.
Right. Okay, so you just talked about all the things kind of needed to get pre-qualified. Let's dive into that real quick. So when someone comes to me, they want to go buy a house, I send them to you. The next step for you is to pre-qualify or get to a place where I can get a lender letter or proof of funds so that if, after you've done that process of getting pre-qualified, I can take that letter and say, hey, we can buy a house. Right. I feel like different lenders have different specifications on how to get a lender letter. I've worked with lenders who do very little to pre-qualify, like literally just totally rely on what the client says they do without digging in deeper, and versus what you guys do, which is get a lot of like actual documentation that you're going to need once it goes into underwriting, which we'll talk about in a second. So what do you guys do to get someone pre-qualified for a loan?
So it's hard for me not to laugh at what you just said because I've had a lot of people who have come to me and worked with lenders that have done that, and what typically happens is their loan falls through or something happens later on because they didn't do the work up front. And
and this has happened, I mean, more than a few times. It even happened with close to my own loans early on before I knew like how difficult it was to actually get a loan. If you're like a normal person or not a W-2 employee, I've had plenty of folks say, yeah, I've got my pre-approval. They got it from, we won't say names, but they got it from an online lender or, just whatever. And they come to me, someone not local, someone like not like yourself. Number. Yeah, 1-800 number. And they say, yeah, I've been pre-approved for, $800,000 and we get into the loan. And if you're, some real estate agents will just take that and go.
Yep.
But unfortunately, once you go and you find a house, that's when it really gets real a lot of times. So once you're under contract, now ABC lender is doing their true due diligence and figuring out if you actually qualify for that loan.
Right.
And a lot of times there's something that you could have worked on the front end had you known that comes up while you're under contract. And in a competitive market like Nashville, you're unfortunately you will be passed on to someone who's already pre-qualified that can close a loan. Because, lender letters are as useful and valuable as, probably this coffee mug. I mean, they don't mean very much because anyone can get like a pre-qualification from www.whateverloan.com. Right. And, and that really, when that happens to somebody, it has an impact of making them not want to purchase a home and just 100%. Continue to rent. So if you get hit in the gut and you're under contract, you fall in love with a house, and then all of a sudden you find out you don't actually qualify for this house, it just hurts.
Yeah.
So we want to avoid all of that by getting actually pre-qualified by a real person and trying to figure out if there's anything that we're missing on the front end so that when we do go under contract, you have the best chances of closing on the deal. Not always foolproof. There's things that still can come up, but that's why you want someone like Josh to help you kind of sort through that. So
yeah, because at the end of the day, I mean, in my opinion, you're working with real people in their lives. I've actually had a guy that I worked with last year who, same situation, got approved by an online lender, didn't know any better, had seen all the commercials, and moved here from another state and to have their contract fell through because they weren't fully approved the right way. And this man, had to stay in Airbnbs for a couple of months. He had no family here, no nothing. And we got in, came up with a plan, because that's why I do think, who you work with, those pre-approval letters, they should mean something because, the company, around this area, people know our company. We've been the number one lender 5 years in a row in Mount Juliet, because if you've got a letter from us, it's because you've been fully pre-approved. We pre-underwrite our borrowers just to make sure, because at the end of the day, I don't want to waste your time. I mean, you've got a family, like I've got a family, and other people, like you don't want to send someone out, like I'm approved for $400,000, and then have you write up a contract, have the seller sign it. All this work is done on the back end that people don't even know about, and then this person's not even approved. And plus, like you said, it crushes them, and we don't want that.
Yeah. So, again, can you talk through again what the process of getting pre-approved, pre-qualified, how long does that take?
Yeah.
And, like, I guess, do you know how much you, like, can get?
Mm-hmm.
Like, what's the process of figuring out the number of what you can afford and all that good stuff?
So typically, I always tell people, because that's a standard question I always get on like that first phone call, is how long do you think it'll take? And it takes as long as you want it to take, honestly. If you get me, I mean, I've had people who have called me and had all their documents right then. Hey, I know the process. I've got my documents. If you can get them to me, I can get you approved that day. If everything's in line, let's say like
What
that.
are the documents that you get?
So it's kind of what I hit on earlier. The 2 years tax returns, 2 years W-2s, or 1099, whatever you're paid. And then 1 month of pay stubs, 2 months of bank statements. And then from there, like, that's another thing. People call me and say, I make this much a year. Well, if you're not annual salary, I have to calculate your income a certain way. Like, these guidelines come down from Fannie Mae and Freddie Mac on how we have to calculate income. So I'll calculate your income off reviewing your tax returns and your pay stubs. Then we pull credit, and that pulls in all your liabilities. And then what we have to work with is obviously credit score, because you have to have a certain credit score to qualify for certain programs. A lot of them have different qualification standards. And then they have what's called a debt to income, which I know you've heard. It's basically where we take your proposed housing payment with your monthly income, and then divide that into your total liabilities with your housing income, and then divide that by your monthly income. In most programs, we have to stay below 50%. So for simple math, if you've got $1,200 in monthly liabilities and you're trying to get a $1,000 house payment, but make $4,000 a month, that's $2,200 in liabilities. You're above 50%. Like, it would be hard to qualify for that loan. So we double and triple check all that stuff, and we verify that you can qualify for that. And when I qualify someone, I talk to them, like I dive in, what are your goals? Like, what is your ideal payment? What is the price range you're looking for? And then I get all that information, and most people want to know the max that they're approved for. So it might not be what they're comfortable paying or what they want, but I'll approve them the max that I can. I'll analyze those documents, look at the credit, and then I'll enter in the information and run it as high as I can. And we have a system, an automatic underwriting system that we run them through that spits out right back if they're approved or not. And then we send them through a manual underwrite as well with our underwriters to make sure that
We're not missing.
Yeah, we're not missing anything. And like, because we're all human, can have errors.
Yeah, and especially going from automated to
Yes.
Usually when the human gets involved, they can kind of see the nuances of, oh wait, this person has child support.
Exactly.
Or there's some monthly expense. And one thing I normally suggest is to go for the max, because that benefits us in many ways. Not that I want you always to pay the max.
Right.
That's not what I'm saying. I want to know what the max is, so that when we go put in an offer on, let's say it's a $400,000 house, but you're pre-qualified for $750,000, that lender letter or proof of funds to that seller says this is a really strong applicant.
Yep.
They can afford $750,000, but they're not going to have any issues buying this particular house, because I know they're like, a lot of when I first got into the business, I just, you think, oh, we only want to show them the very least that we can afford.
Right.
And maybe in certain markets that works, but in the Nashville market at least, I don't like if I'm selling a house and I'm selling a $400,000 house and this person can only afford $400,000. I'm a little worried about that person not being able to qualify because they're just barely making it. If anything comes up in the underwriting process that they weren't aware of, they're going to have issues and waste my time, my client's time, and cause issues. So I think it's good to go for the max so that you know, and then have the discipline to know what you're comfortable with monthly. A lot of people think that down payment is the most important aspect to whether, like when I talk to a lot of people about buying a house, like what's keeping them from even looking at the process is I'm trying to save up for a down payment. And they think that is the biggest thing. I used to think, like, when I first bought my first house, that was like, I need a down payment.
So our parents' generation thinking.
Yeah. So, like, talk about how important the down payment is to this whole thing.
So down payment is important. I'm not going to say it's not, but it's not the most important thing.
Like, how much do you need technically, like, for a down payment on a house, percentage-wise?
So, I mean...
For a primary home buyer.
Yeah. First-time home buyer, I mean, your conventional loans, they have loans you can go as low as 3%.
So 3% of, let's say, a $350,000 house?
That's $10,500.
It's $10,500.
Yeah.
Yeah. It's not, $30,000. $10,000, not that that's a small amount. Okay, so say you have a $350,000 house. So you need $10,500. Hope that math's right.
That's right.
I'm bad with math. So, and then what other costs come along with a loan? It's not just the deposit a lot of the time. Is there any other?
Yeah. And that's the big thing that a lot of people don't realize. So going back to your down payment question is like the old school thinking is you have to put down 20%. That is to avoid PMI. So that is not true. Like right now, getting in a house to me is the most important thing because if you bought a house 2020 and maybe put down 3 to 5%, your equity that you gained is outranked paying with your PMI.
Well, you gotta talk about PMI. What's PMI?
Private mortgage insurance. It's just if you don't put down 20%, they look at you as more risky. Obviously. I mean that's how they define it. And so they charge you a certain percentage of the loan for private mortgage insurance of your loan amount that you pay monthly. And it's not an insurance that benefits you. It's honestly just the risk level of your file. So
essentially, if you only have a certain amount, like you only want to put 3.5% down.
Right.
What you're saying is I'm willing to pay a little bit more every month to ensure the mortgage that I'm buying.
Yeah.
So, and that all gets calculated into your
monthly payment.
Yeah. And I would say primary home buyers, the majority of primary home buyers are putting less than 20% down.
Yes. Nowadays.
So it's basically a given that that's what you will do. Where does credit score come into play for getting pre-qualified?
So credit score matters the most on interest rate. Well, no, it matters the most on qualifying. So every program has different standards. For conventional loans, it's typically 620. FHA, you can go down to as low as 500 on some.
Okay.
But for example, if you have a 550 credit score on FHA, they require you to put 10% down.
Right. So a credit score, I mean, we kind of know this, but just to kind of talk about it, it's like, it's your score on how likely you are to pay back your debt.
Yeah, that's exactly right.
So if you've been late on things or whatever, like, the magic credit score fairies will deduct from your pointage, right?
Yeah.
So you definitely want to like pay those off. It's actually also not fair for like maybe people coming right out of college who have zero debt and have no credit history at all.
Correct.
They may not have a super high credit score just because they don't have any. I know for my first purchase, I don't think I had a credit card.
Right.
Yeah, and I remember that being an issue. And like,
did you have a cosigner?
I didn't even have a cosigner.
Okay.
So what I had to do was, I think they had to look at our rents, our bills, and paying off our bills. They just needed to look to see if I was paying off my debt.
Yep, that's exactly right.
And it was a pain in the butt, but we eventually got it figured out. So if you can open up a credit card, I'm sorry, Dave Ramsey, but if you can open up a credit card or whatever and pay it off to show that you have a credit score, that will serve you to purchase a house, which is honestly the fastest wealth building thing you could do. So pay it off, of course, because if you don't, it'll ding the other way and it will hurt you and make it very hard to purchase. But so there's some discipline that's involved. So
the way I tell people when I'm working with them with credit, same way I did it. I got one of those prepaid credit cards, $500 limit or whatever. I would fill my gas tank up twice a month. I would put that card in a drawer and leave it till the end of the month, pay it off every month, then get it out and do it again. So I'm not tempted, because you're carrying it around, you might have a bad day, like I'm going to buy these new shoes I've been wanting or whatever it is. And then, so credit cards can be a bad thing, but they're a great thing too, because you need credit.
Well, yeah. Well, you need some evidence to show that you're going to pay back your loan. So credit score is how we do that. I don't know how other countries do it, but I know that's how we do it. I don't know. I can't speak for that. But anyway, so credit score is important.
Right.
So based on your credit score, though, things happen. Medical bills happen. So they can, there can be a range, and there are different loan products for people with different situations.
Yep.
So let's talk about say you just have normal credit. Normal meaning you pay off you don't have a lot of debt, late payments and things of that nature, medical bills that hit you from, some unfortunate situation.
Right.
What would you say like an average or good credit score is?
I mean, average or good? I mean, good
Maybe
is...
not average. What's good?
Yeah, I mean, good is you want to be 720 or higher, kind of.
720. So, and what does that allot you if you're 720 or higher?
So that's where we would look at conventional loans, kind of 700 or above, because in my world, there's 740 is the best score you can have. You can have an 800, it's no better than a 740.
Why would you want a conventional loan?
For example, the PMI that we hit on earlier, FHA has another type of PMI, but it's called MIP. It's mortgage insurance premium. And
so it could be cheaper.
Yes, it's cheaper. Yes.
Conventional loan would be cheaper per month.
Yes.
And there's less restrictions in the underwriting process because all of these loans that we're talking about are backed up by...
Yes, by us. I mean, essentially the lender, they're lending you the money thinking you're going to pay on it.
Yes, but they're also backed up by the government.
I mean, some like FHA is, and then, I mean, at the end of the day, Fannie Mae and Freddie Mac, they're government-sponsored entities.
Exactly. So and there's certain guidelines, but you're seen as less risky, so there's less scrutiny on these loans. They're still very, very looked at very, very closely for a lot of reasons, but you're less risky if you're 720 or above, right?
100%.
So you can do a conventional loan. If you can do a conventional loan, great. That's the way you should go.
Right.
The underwriting process is a little less crazy. But if you're below that, does that mean you can't buy a house? Like, what is the minimum credit score that you can realistically think about purchasing a home?
Realistically, I mean, you can go to as low as 500 on FHA.
500.
Yeah, but they have certain requirements. If you're that low of credit score, you have to put down a larger down payment. 550 or below, you're going to have to put down 10%. You wouldn't qualify for a conventional loan. But then to qualify for FHA just at 3.5%, you have to have a 580 score.
Okay, so 580 or above, you can put 3% down.
3.5% on an FHA loan.
And so that's doable for a lot of folks.
Exactly. And that's where I think FHA is great because it allows you to get in a home and start reaping the rewards of the tax benefits of, building equity and paying yourself instead of paying a landlord.
And yeah, exactly. So FHA loans. So what is an FHA loan?
FHA loans, that's sponsored by HUD, and it's just a government program that they made it to allow people with lower credit scores to be able to get in there. And kind of like you've hit on, there is stricter underwriting guidelines, but I mean, it's great because you can get in there at a 580 credit score and become a homeowner and build your credit up majorly.
Right.
Because a lot of times people don't realize we also use a different credit scoring model. We use a FICO model, a few different ones. And people will come to me, and I use Credit Karma too. It's great. Love it. But it's not, they use a Vantage score. So people, then I talk to them, they say, well, Credit Karma tells me my credit score is this. And a lot of times that is not what I'm seeing when I pull their credit. Because we use different models, and there are a lot of different ones. But FHA is just the fact that you can, have a 580 and still purchase a home is amazing.
Yeah. Actually, I've had clients like I think they closed with you, right?
Yeah.
So like I had a client who were clients, great, made a ton of money, but just had bad situation, and their credit got hit really hard. They made great money, made more money than I do, but they were just like concerned that they couldn't buy a house because their credit score was not great.
Yeah.
It was below 600, so they assumed they couldn't buy a house.
581.
You remember what it was?
Yeah.
They were right on the brink.
Right on the brink. That's what I remember.
So, and we figured it out.
Yeah.
So, like, I guess at the end of the day, I think if you're on the sidelines of whether or not I can buy a house, or you're making assumptions about what you can and cannot afford, I think even if you're in the beginning stages and you're thinking I'd like to buy a house, or you just got a new job, or whatever, or you've had a job, whatever your situation is, I think it's important. I think it's okay to meet up for coffee with someone like Josh or myself or both of us and talk about your situation, come up with help you evaluate your situation, come up with a game plan, because a lot of what is needed for this process doesn't come natural, and honestly, we're not taught. We're not taught what is important in order to do these, in my mind, essential life
adulting
things that we do, or what our society shows as progress or moving forward. So, like, I think it's getting the information is probably the most important thing, and you may be surprised on what you can or cannot qualify for on both ends, right? You may just assume that, I can definitely go do this, but there's this thing over here you haven't thought about how it's going to affect this thing over here. So, for instance, having this, $80,000 truck that cost you, $800 a month, how that affects your chances of living in a home that you own, and like making the sacrifice or making the changes in order to prioritize those goals. So I think probably the first step is just meeting with someone like myself and Josh to help talk about your situation. And that can be a scary thing to do because you're talking about your personal information. But I know for me and for Josh, we've sat with lots of different people who are on lots of different situations. And there's really no judgment because I've seen it all. Yeah. And I've been through it personally myself with purchasing homes. And, so I guess my tip to you would be to find something you're comfortable with that you can kind of lay this information out, and we can kind of talk through a strategy for getting into a house if you're not already into a house. Yeah.
One of the most rewarding loans I've ever done was actually an exact scenario you described. It was in 2020, older lady. She was convinced that she could never own a home. Buying a home wasn't for her. And I said, no, home buying is for everyone. Like you said, it all starts with a plan. So we made a plan, and she executed that plan perfectly. 8 months down the road, we got her approved. And she bought her first home. And it really is, like you said, just we're all human. You and me have been through it. We've been through times, like people have stories. It's just sitting down, coming up with a plan, listening, and like executing on that plan. And then getting approved. And then that is, like you said, like the American dream, like what society tells you, like, hey, you've made it. But I mean, we all need help, and it's just a conversation and coming up with a plan.
Especially on that first one, because like in an appreciating market like Nashville, that first one is just the foundation for so much more. Yeah. And it's the first one's always like the hardest, because here at least that house is you're going to be paying today the most that house has ever been worth.
Right.
You're going to be probably paying the highest per square foot in that neighborhood that anyone's ever paid, because prices continue to rise, even in a challenging market like this where interest rates are as high as they are. We're not seeing prices plummet dramatically.
No.
We're in December 2022 and they're stabilizing, but they're not dropping down dramatically to where, it's like easy to go buy a house. Like, it's still a seller's market in my opinion. So
Yeah. And Zillow came out the other day, and they've seen 20% the past couple of years, but the average is around 4%, and that's what Zillow forecasted for 2023. And you can't tell me that, let's say you buy a $400,000 house, that's $16,000 in appreciation. Yeah, it's not the crazy amounts
Right.
you've heard, but
So
$16,000
year-over-year,
compared to apartments.
right?
Year
Over year, nationally, we're still seeing a 3% increase, is what Zillow is saying, and that's a national. Now it's the national average over the last 10 years, a little bit more than that.
Oh,
but
yeah.
It's not declining,
No.
even with interest rates being where they're at.
And
it's
that's starting
not
to stabilize too. So.
Yes. So anyway, I hope you found this information helpful. If you want to get a hold of Josh, how can we find you?
On Instagram, Josh Jones, your home mortgage advisor, and then website, Facebook.
Google Josh Jones loans in Nashville, and
Yeah.
you'll find him.
There you go.
And if you want to find me, you can go to dlgoodmanproperties.com, or you can shoot me an email, david@dlgoodmanproperties.com, or you can comment in our little YouTube page here. You can probably find my phone number pretty easily if you Google David Goodman Real Estate in Nashville. There's a lot of David Goodmans out there, so make sure you are looking for the guy in Nashville. And thanks for watching, and we'll see you next time.